Listen up, folks. Intel, the once mighty king of chips, has been taking a serious beating on Wall Street. The stock price has plummeted over the past year, leaving investors wondering if this blue-chip giant has lost its mojo. We're talking about a company that was once synonymous with computing power, struggling to keep up in a rapidly changing tech landscape, but don't count Intel out just yet. This ain't the first rodeo for Intel. This stock has seen its fair share of ups and downs over the years, but this recent downturn has been particularly brutal, with the stock hitting lows not seen in recent memory. What's going on here? Is this just a temporary blip? Or is Intel facing a fundamental shift in its fortunes? Let's dive in and find out. To understand Intel's current predicament, we need to take a closer look at its financial health. And that means diving into the world of financial ratios. Don't worry, I'll make this as painless as possible. We'll start with the classics: price to earnings, PE ratio, price to sales, PS ratio, and return on equity, ROE. These ratios give us a glimpse into Intel's profitability, growth potential, and efficiency, and right now, the numbers are painting a mixed picture. Intel's PE ratio, a measure of how much investors are willing to pay for each dollar of earnings, is lower than its historical average. This could suggest that the stock is undervalued, or it could be a sign that investors are concerned about future earnings growth. The PS ratio tells a similar story. Intel's revenue growth has slowed in recent years, and its PS ratio reflects this. Meanwhile, the ROE, a measure of how effectively Intel is using its assets to generate profits, has also been declining. This isn't exactly a ringing endorsement of Intel's current performance, but remember, these are just snapshots in time. We need to look at the bigger picture to get a complete understanding of Intel's financial health. Now let's talk charts. Technical analysis can be a powerful tool for understanding stock price movements. By looking at historical price trends, trading volume, and other technical indicators, we can identify potential support and resistance levels for Intel's stock. Think of these levels as battle lines between buyers and sellers. Right now, Intel's stock is trading below its 200-day moving average, a key technical indicator that suggests the stock is in a downtrend. This is not what you want to see if you're bullish on Intel. However, there are some signs that the stock may be finding support at current levels. The stock has bounced off its recent lows, and trading volume has been relatively light, suggesting that the selling pressure may be easing. So, what's the verdict on Intel? Is this a buying opportunity, or is it time to cut your losses and run? The truth is, it's complicated. Intel is facing some serious challenges, from intense competition in the data center market to the rise of new technologies like artificial intelligence. But Intel is a survivor. This is a company that has been counted out before, only to come roaring back. Intel is investing heavily in new growth areas like AI, autonomous driving, and the Internet of Things. These investments could pay off big time in the years to come, but they will also require significant capital expenditures and may not generate significant revenue for several years. The bottom line is that Intel is a company in transition.